What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is July 15th of 2019. Well, folks, I hope you are having a fantastic day wherever you are. And in today's video, I want to spend some time to try to answer two key questions that I get from a lot of people in the cryptocurrency space. And it's usually one of these two. The first one is one that I've been asked a lot as of recent because we've gone from $13,000 to $10,000 for Bitcoin. And that is whether or not we are in yet again another Bitcoin bubble and that we are inevitably set for lower lows and a lot of people losing money. And then on the other side as well, a 180 from that is that we are set out for a new paradigm where Bitcoin by 2020 could reach upwards of $1 million, as some experts and individuals have claimed. Well, I want to go ahead and get straight to the point, guys, as I am with every single video. I'm not going to drag it on towards the end. I believe it's neither of them. And it's something much more in the middle and conservative that's realistic and fundamentally rooted in what Bitcoin is. So we're going to be talking about that in this video. I hope you'll stick around. We've got a lot of interesting talking points to build on this just to really kind of make the case for yourself, or for anyone else who might be skeptical of Bitcoin. You're welcome to share this with family or friends. All right, so I want to start off with the more critical side. To be fair and neutral here, someone who's more pro cryptocurrency, you guys know that. I want to go ahead and start off with an opinion piece that came from MarketWatch recently. This was just published this morning. It's an opinion piece from MarketWatch, which is a site I actually kind of like, but it's a little bit tabloid-esque in the sense of how it produces its articles. More short and sweet and to the point, and we'll see how this writer gets a few things right and a few things wrong. So the opinion piece is that Bitcoin buyers are only fooling themselves again. The second cryptocurrency bubble will end just like the first. Now, my one problem with this is that it's not so much that they believe that Bitcoin investors are fooling themselves, who is directly a Bitcoin investor. There's new Bitcoin investors coming every day. But the major thing here is that there's been more than a bubble in cryptocurrencies. This isn't the second bubble. There's been multiple major cycles where Bitcoin multiplies over and over. However, each and every time it's at higher lows, right? So if you're buying through corrective periods, you're usually going to win out. At least history tells us that. So anyways, even if it is a Ponzi scheme or anything like that, just putting that out there. But I really don't think it is, and we'll explain why. So money is the linchpin of modern economies. We do not need to grow our own food, make our own clothes, and build our own furniture. We can specialize in what we do well and use the money we are paid to buy what we want. It hardly matters what is acceptable as money. And the author here, kind of pins to this the fact that we used to use seashells and whale teeth and woodpecker scalps as forms of currency between one another. The people of Yap, interestingly enough, use stones canoed in from hundreds of miles away. People have been willing to be paid in shells, scalps, and stones because they were confident they could use them to buy things, okay? And I really got to say, I'm glad at least they know this about monetary history. If you guys haven't studied this, it's really fascinating. This is a Yap stone here. You can see just the scale of it here and why it might not work good as currency, which I'll build a point on later. But this was a form of basically currency or money that people used to use in tribal civilizations years ago. The Yaps used to use. And it's a very exciting thing to look into. So as goofy as it might seem, this is how value used to be exchanged as an alternative to doing just quote-unquote barter or exchanging. All right, so as we go through the article, the author really alludes to really one key point. And that is the fact that, they read the Bitcoin white paper. Bitcoin talks about being this digital ledger system that uses blockchain technology and proof of work and basically exchanging, building a global ledger that we can, remain relatively trustless over. In this case, there's only the miners to be trusted in this case who have an economic incentive to keep the network floating normally as planned. But the whole thing here that they talk about is, right here, this quote really kicks it off. As an investment, Bitcoin is no better than a woodpecker scalp or a Yap stone. Okay, so this is where I have my disagreement, but we'll continue to let them speak on it here. As an investment, a Bitcoin is no better than a woodpecker scalp or Yap stone. Real investments like stocks, bonds, and apartment buildings generate real income. Bonds pay interest, stocks pay dividends, and apartments pay rental income. Bitcoin generates no income whatsoever. So they're making the case here that Bitcoin doesn't make a good investment because there's no yield tied to it. As they mentioned here with, for example, bonds, you're getting paid a yearly interest rate, right? And along with that as well, for stocks, in many cases, you can get paid a dividend. But let's be real here. Not only do some stocks and other financial assets not pay residual income or some form of an interest payment or dividend, but along with that, there are many major assets in the world that don't yield anything at all. One of those, for example, would be gold. So just because something doesn't yield value, for example, currencies, which again, this is something that a lot of people would tend not to agree with in the sense of the definition I give it. Currencies, as much as they can depreciate due to inflation, are one of the largest stores of value outside of real estate. It's a $90 trillion set of wealth that's broadened out amongst all currencies of the world, from the US dollar to the euro to the Japanese yen to the Chinese yuan, you name it. Over $90 trillion. Gold, on the other hand, is about $7 trillion of stored value. So we're talking almost about $100 trillion of wealth that's locked up in things that don't yield you anything and can be transferred across the world, very similar to Bitcoin. Now, the interesting thing here, I mean, this is just where it's a slap in the face to read this as an investment, that Bitcoin is the same as a woodpecker scalp or a yap stone. First off, it's not physical. Second off, it is not duplicable in the sense that you could just find a bunch of stones across the world. It's something that's not very scarce. Bitcoin is not only scarce and limited like gold, it's finite with a 21 million coin supply. You cannot generate Bitcoin beyond that. That's not the case with woodpecker scalps or yapstones. And then you get into the topic of the greater fool theory. And this is basically where the author believes Bitcoin is, because it's not yielding, because it's not tangible, it's all digital, that we live in a system where it's going to simply be, Bitcoin investors buying in, hoping they can sell it at a higher price. And I have no doubt there is a lot of people out there who are part of the quote unquote hodl culture, who are like, I'm on Bitcoin and one day it's going to be $100,000. I'm going to get a Lamborghini. Guys, that's not the actual point of Bitcoin. It's not to hopefully eventually cash out to fiat. The inevitable game of Bitcoin will be that you will want to hold your Bitcoin, because by the time that Bitcoin is worth $1 million, it is going to mean that fiat is practically worthless. It has lost huge amounts of its value by then. And that's why you can potentially reach these kind of inflated valuations. I don't believe we'll reach it by 2020, but this is where the author misses out. Having a global hedge that is not tied to any nation or economy, and being able to store value without permission from any government. Once you own Bitcoin in your own wallet, it is your money. No one can take it from you or seize it from you or freeze it. That is extremely powerful. And it isn't something that can be easily diluted, as the author was alluding to in regards to the yapstones or woodpecker scalps, or didn't really mention. So again, they talk about it being Bitcoin is a modern day net vendor, and that the price of Bitcoin is no more related to economic fundamentals than was the price of the South Sea net vendor stock. Bitcoin's prices are supported by nothing more than the faith that the greater fools will pay higher prices. Well, it's not just greater fools, it's miners, it's investors, it's people, for example, across the world who need a store of value. And this is where the real value proposition comes in. As we can see here, there was an article from Quartz a few days ago, and I've been meaning to talk about this, but I felt it'd be good for this video topic. And that was that Zimbabwe had banned the US dollar for its citizens. So what they actually did is, you've seen a huge switch because people can't use the US dollar in Zimbabwe as they're trying to, basically pressurize people through capital controls from being able to access other currencies. People went to the only option they really have. When the Forex brokerages are closed off, when all of the central points where currency exchanges get closed off, you have to resort to something that's outside of the control of government, and that's where local Bitcoin comes in. So local Bitcoin demand has been soaring over the last few weeks as Zimbabwe has made this change, and it's really exciting to see. I mean, this is something that Zimbabwe's been an absolute poster child of currency inflation, because historically, time and time again, it has gone through currency crises. It has had mismanagement of monetary policy. And the crazy thing is, a lot of people think that this is not possible in the United States. It's not possible in the Western world, that this is something that happens in developing countries. The fact of the matter is that even if that were the case, there is a huge market here of individuals who need cryptocurrencies, and that we are not impermeable to it. If we make the same mistakes, if we have a failing financial system, which we are starting to see in Europe and I think in the broader economy, then there is a huge market here. But even if we take the conservative estimate, and we take a look here, for example, at Zimbabwe. Zimbabwe has a $30 billion GDP, and it's one of the smaller examples. Venezuela, for example, even though we don't have exactly up-to-date economic data on its GDP, is somewhere between $300 to $500 billion in annual GDP. Argentina, around $500 billion in GDP, around $518 billion. $766 billion for Turkey. India, $2,726 billion, and China and Russia. You guys know the scale of the economies here. Now, I would say that this is kind of the market we're tackling towards now. Argentina, Turkey, Venezuela, you name it. These are more of the kind of, either emerging economies around the world that have unstable currencies. We know we have a currency crisis in Venezuela. We know we have one in Argentina. And not to mention, GDP isn't really a measurement of its nation's wealth. There's actually more underlying wealth in the nation. It's just what it's been produced in that year, gross domestic product. It's what the nation produced in an annual year. So there's even more wealth through the currency and through a variety of other different types of assets in those countries that need to flee somewhere when the underlying currency pinned to them, used to exchange between that asset, becomes valuably worthless in a sense. So that's the major point here, guys, is that that's where the value of Bitcoin comes in. It's in the fact that this is something that the entire world can use. The entire world has access to. Anyone can participate. And again, it's non-correlated. So the fact that it's not tied to one direct nation gives it a lot of security. So there's a lot of valuable properties here for Bitcoin. It's why Bitcoin, yet again, as we've seen historically, sets higher lows as the supply gets more and more limited in the sense of the future production of Bitcoin's mining through how Bitcoin is generated. We can see here that it's setting higher levels and higher lows in this case, higher highs and higher lows, which is a really good sign. I mean, no financial asset has moved like this in a 10-year period. And Bitcoin has proved the world just how resilient it is, even though all of the types of efforts from governments to censor it and all of the efforts of people to doubt it, and to shun it, it has continued to set higher levels. Ponzi schemes don't last like this. That's not how a Ponzi scheme works. Ponzi schemes move in very quick parabolic natures, and then they go to zero because when there's enough incentive, people just cash out en masse. In the case of Bitcoin, though, there is enough demand growing in this world to continue buying Bitcoin as a hedge, similar to gold, if the price gets low enough, or if the incentive is there, or if the demand is there, if times get tough enough in these countries. Zimbabwe is a great example of that. Now, let's go ahead. I've already rambled on enough as putting my criticism on this article. All the best to the author, even though I disagree. I will say this, though. I do not like absorbent estimations like this in crypto markets. So McAfee has been infamous. I myself have made some pretty bold predictions for Bitcoin. I called for 50,000 by the end of 2018. I was completely wrong on that. However, in this case, I'm not going to stand out and say that Bitcoin's going to $1 million by 2020. All right, my estimates for this next cycle are somewhere between 60 to 70,000 more conservatively, and at the greatest 100,000. To move Bitcoin to $1 million market would take a lot of capital. And this whole estimation comes from the fact that it's betting most likely on a currency crisis. So McAfee has been extremely confident on Bitcoin going to this level since back in 2017 and 2018. I think the tweets are down here in the article, or maybe oh no, sorry, I don't know if they've actually got it in this piece right here, but he basically tweeted out a long time ago in the sense of replies stating that Bitcoin is at such a short level here that we can expect it to go to $1 million in the next few years. And the only way that you're going to get something like that, and we really have to talk about what $1 million Bitcoin means. That means you're talking about a $21 trillion market cap. Do you see where I'm kind of a little bit conservative about that? I mean, $21 trillion, guys. That's a little bit too high to get in this cycle. To go from 20,000 to, or sorry, let me actually take the market cap valuation. If we're, let's just stick to price. If we're doing 20,000 up to $1 million, that's a 50x. I don't see that coming. You have to talk about markets of scale, and markets tend to, over time, move at a slower rate. All right, Bitcoin, for example, has multiplied less and less with each cycle. I'm pretty sure we're not going to get a 50x if the last time we only got a 20x from the all-time highs. So this is where I remain neutral and more kind of middle ground in the sense of how I approach things. I believe we could easily hit, again, 60 to 70,000 or maybe upwards towards 100,000 if things go right and things go really parabolic. But that's a much more reasonable estimate than something like $1 million, which is 10 times that estimate that I have at its most, optimistic level, right? So do not fall for things like this, guys, unless we are, on the idea that there's going to be a currency crisis next year in the US dollar. I think there's going to be a slowdown in the US economy. I think there's going to be worrying concerns. I don't think there's going to be enough to lose enough value in the dollar and enough trust in the government to push Bitcoin to $1 million. Could Bitcoin go to $1 million in the long term? Possibly. And I think a currency crisis would fuel that. If there is distrust in international currencies, if people start to step out of that system, or if there is enough emerging market currencies that do collapse, there is a chance of that. But you're talking about a $21 trillion valuation. You are not going to get there in 1 year, and you're especially not going to get there overnight. It is going to take a very, very long period of time before we get to something like that. So let's keep in line with our conservative estimates. Let's keep a little bit more rational about it. But yet again, never forget what makes Bitcoin valuable, and to realize that it is a true emerging store value and currency for the world. I'm very excited for it, guys. I hope you are part of the revolution as well. I'd love to know down in the comments down below what you guys think about this, in regards to what we talked about. What are some of the pros and cons of each viewpoint? Again, where are your price targets for Bitcoin? Why do you believe Bitcoin is valuable to yourself? And what's maybe a good use case for Bitcoin? Like where you've actually seen it being used in the world. I think that's always something good to talk about. And maybe it's not so much in our neck of the woods or in our area or region of the world. It may be somewhere completely distant, as we talked about in developing or third world countries. Again, would love to hear from you guys down in the comments down below. Get a discussion going as always. But until the next video, I hope you all have a fantastic day, and I'll see you all in the next one. Stay tuned.